Good afternoon, Professor. My name is KK Zhao. My student number is 220-474. This is my presentation about the assignment for the finance business managers. The first part, I choose the company Lego Group. Lego is a Danish toy brand which is founded in 1932 as a cabinet shop and then development to international organization within just 9 decades. Last year, they have celebrated their 90 years anniversary, and the CEO of Lego said 2022 was a milestone year for Lego Group because in this year, they reached more children with the Lego play than ever before. This report is generated to analyze the financial conditions of Lego Company in 2022 based on this annual report, and then take a comparison of the main financial ratios change between the year 2022 and 2021. The financial techniques are applied in this report in order to calculate some main ratios, including profitability, liquidity, efficiencies, and solvency ratios. Then some recommendations are made. Based on the 2022 annual report, Lego had an excellent year in this fiscal year. It sees an unprecedented double-digit sales growth of 12%. Despite the fact that toy markets around the world are going through a downward trend. But Lego has managed to increase its market share even further. Its revenue increased by 70%, though commercial operations were ceased in Russia due to the conflict with Ukraine and ongoing negative impact of the Chinese pandemic policies. And another 155 new branded stores were opened globally last year. Next, we will take a look at the data. The first one is profitability. As we see, all the profitability ratios shows a slight decline in 2022. In general, a company with an ROA of 5% or more is considered as performing well, and with above 20% is considered excellent. Lego's ROE and ROA maintained in a high level, which proves that a company uses equity financing to grow its business, which has a good investment returns. Next is the liquidity ratios. While the current ratio doesn't quite reach the ideal 2-to-1, but Lego comes pretty close, with a quick ratio of more than 1 performing well, and suggesting that its current liability can be fully covered. The cash ratio is low because there's no cash equivalents to show on the statements. In general, Lego has a good asset position, which can cover its short-term debts. There's no debt pressure for the company. Then is efficiency ratios. As we see, only capital turnover and working capital turnover has increased slightly. Compared to 2021, although the current receivables is declined, there's no material country-specific receivable risks, and the receivable period becomes longer, but generally maintained in a good level. Finally is the solvency ratio. Generally speaking, Lego has a strong long-term solvency. Compared with last year, the year before, the debt ratio will be lower and the equity ratio will be higher, indicating that the Lego Group doesn't rely on external financing. The finance is a direct investment through equity and intercompany loan funds, while the Lego Group is a operating company, and any excess liquidity is distributed to their owners. Maybe they have higher commodity price and have a negative impact on the production and distribution costs. Therefore, maybe they didn't actively manage their commodity last year. The overall decline in profitability ratios may be due to the expansion of the production capability expansion, and the investment in plants, properties, and equipment, and the rising price of the raw materials all has increased the production costs. Besides, Lego's revenue has grown rapidly in the past 2 years, which closely relates to the strong consumer demands. In 2022, the company raised the price of their products, before which customers stored up quantities of their products. This is also why the sales of Lego has increased largely in last year. The slower inventories turnover may be related to the regional conflicts and the effect of the post-epidemic era. Moreover, they have invested large quantities of a portfolio in the new product R&D and accelerated the investment in digital transformation and focus more on the renewable materials. The increasing investment need time to convert to profits, and this is why the monthly efficiency ratio is showing a downward trend. From the financial ratios analyzed above, some limitations of the calculation could be seen. First of all the index are getting from the historical data based on the financial statements, which greatly reduce the correlation between the information provided by the index and the final decisions. Second, ratios could not be analyzed independently because every ratio has its using scenarios and limitations without taking all the factors into considerations. Third one is Lego's annual report only provide 2-year data for comparisons. However, for assessing a company's financial position, it's more significant to view the ratio with in a very long time and with some fluctuations. Last, in some aspects, numbers can be manipulated easily when a company is trying to show some good-looking ratios. The second part is the WOS company investment recommendations. The result of the calculation show as below. The NPV of machine A is 33.6 thousand, machine B is 50.1 thousand, and the machine A needs 2.18 years to cover all the investment, while machine B needs 3 years, longer than A. The IRR of the machine A is 34.8%, while machine B is 26.1%. ARR of the machine A is 24%, larger than the machine B's 20%. So all these indicators got the same result for the WOS company to invest in the machine A. However, using IRR as a new discount of this investment, when the discount rate is 26.1%, machine will get an NPV of 70.8 thousand. When the discount rate is 34.8%, the NPV of machine becomes negative, which indicate that the company will face losses, so the machine B should be rejected. Both of the machine options can be profitable if WOS company asks for a return no more than 26.1%, while only machine A can be chosen if the company needs to get a higher return. Therefore, in any case, machine A will be the best option for the WOS company to launch the new service. Besides, I have to do some discuss about the merits of the non-discounting method, which is easy to calculate and easy to understand, especially for those investors who has no financial backgrounds. So that's the end of my presentation. Thanks for listening.